Crypto Trader is proudly brought to you by Element, a full-service investment bank for the digital token capital markets.
The market stages an epic rebound after the G20 decide that crypto isn't a significant threat. CryptoKitty secures $12 million worth of funding from top-tier US VC companies led by Andreessen Horowitz. US Congress releases a report praising blockchain and cryptocurrency. Child pornography found on the Bitcoin blockchain, and 50 million Facebook users have their data leaked, strengthening the case for decentralization. Those were the headlines. It's Thursday night and you're watching Crypto Trader. This week we're coming to you live from San Francisco, where we are being hosted at TokenFest. All the big names in crypto are here, and I'm going to pin them down and find out what they're doing in this tough market. So stay tuned. So my next guest founded a university, is a venture capitalist, and owns a whole lot of Bitcoin. Tim Draper. Thank you for coming on Crypto Trader.
Terrific. Great to be here on Crypto Trader. This sounds like a great show.
It's amazing. It's the world's only televised cryptocurrency investment show.
Absolutely. It's about time, huh?
Must be.
It won't be the only one.
So you own a lot of Bitcoin. Tell me how you got into Bitcoin and why Bitcoin.
Okay, well, I got into Bitcoin when Bitcoin was $6 Bitcoin, but I gave some money to a guy to buy me some Bitcoin at $6, and he said, I can do better than that. I'll go mine it for you, and we'll get it for $4 a Bitcoin. I said, okay, great. And he went, and he got this. He said, we got this new chip, and it's faster than everybody else's chip. Well, that chip then was designed and went to Butterfly Labs, who then front ran him. They took the chip, they mined Bitcoin for about 6 months, and then they gave it to him when it was already $36 a Bitcoin. But we did get some Bitcoin, and that Bitcoin was stored very securely at Mt. Gox. And Mt. Gox, then the money there disappeared, and I thought that was the end of Bitcoin. But I loved what they were doing. I loved Bitcoin. I loved that it was global and not subject to political winds. And it was this new way of thinking decentralized, thinking that we're all a part of this same planet. And it was such an exciting thought process. And when Mt. Gox disappeared the money, I thought that was the end of Bitcoin. But no, it only dropped about 15%. And so I thought, wow, people really need this. And they believe the same way I do, that a decentralized world is going to be much more effective.
So fast forward a few years, Mt. Gox stores your money, stores it pretty well, and you wake up one morning and the money
it's
is
gone. But at that time, it wasn't that much money. But if it were today, it would be a heck of a lot of money.
I'm sure you'd love
it
those
was like
Bitcoin
40,000 Bitcoin. But then Bitcoin, and I knew that Bitcoin was going to be something really important. And so when the Silk Road auction came up, and the word on the street, everybody was bidding a little bit below the market price. And I thought, well, that's a lot of Bitcoin. I'll bid above the market price. And I got them all. And it was a little overwhelming. But by buying all those Bitcoin, I realized that I was a part of a major movement. And if you've ever bought Bitcoin, held Bitcoin, and spent Bitcoin, you understand that the idea of having a third party that's a bank makes no sense.
So let's fast forward. So you bought the Silk Road Bitcoin. Now we're in 2018 and you've got 1,600 coins, and you got Bitcoin, and you got Bitcoin Cash, and you got Litecoin, which all claim to do the same thing. Are you still a big Bitcoin core bull?
Yes, because whenever new technologies come up, Bitcoin still has the most engineers, and they'll just bring them on. So Bitcoin wasn't fast enough, and all of a sudden the Lightning Network showed up. And And I think the same thing's going to happen with smart contracts, with whatever. And so I still believe, yes, Bitcoin is going to be the big winner, but I think that there are also going to be a lot of other currencies that have specialty applications that we haven't even imagined, but will end up being enormous too.
In the cryptocurrency world today, are there any other coins or tokens that you're buying or investing in? And tell us a little bit about them and why you're doing it.
Sure. I was a early investor in the company that brought Tezos to market, early investor in the one that brought Bancor to market, two of the biggest ICOs in the world. And now, of course, I'm associated with Data Wallet and Credo and some others. I do feel like there are some really interesting applications that are going to come that are going to be tied to industries that need changing. And whenever you get a new currency, the way to look at it, if any of you are out there looking to figure out what do I invest in, look and make sure that it's a movement, that this is a sociological transformation, that it's going to change an industry where the industry is too fat and too happy. Real estate, insurance, banking, venture capital, government, healthcare, all of those are where we as consumers are getting bad service at a high cost, and there's a new technology here that can completely transform all those industries, and it's coming.
So you're adopting an approach of looking at the landscape, seeing what industries blockchain will disrupt, identifying how quickly it will be disrupted, identifying the social movement aspect of it, and then making a decision to invest.
Yes. There's one other thing I look for, and that is, because we get to see so many of these, I look for a token that has the ability to create the full marketplace. So it has to have a real reason to be bought and a real reason to be sold, not just a reason to do an ICO and get some money into the bank of the company. Because, I mean, all of you know that tokens are just like owning currency, right? You're not buying a piece of the company. You're buying the future of a network. And also, you know, if you buy into a company, that's a for-profit company, that's for the good of the shareholders. And they do the work for the good of the shareholders. You buy a nonprofit or an NGO, that's for the good of society generally. Tokens are something new. Tokens are for the good of a societal change that is going to be some sort of a transformation or movement, where people are saying, I want to be a part of something that's going to change whatever we're doing, and we're not doing it well enough. So that would include, I mean, I think a women's coin would be a major breakthrough. Particularly, I understand a lot of you are in the Middle East. There's a women's movement out here. I don't know what's going on there, but it's a big one here.
Tim, before I let you go, we've seen a market that overheated last year, and the market's coming down, and maybe it's at reality and maybe it's not. But people argue that the big wave of capital hasn't come into crypto yet. What's the barrier, and why hasn't real money come into crypto yet?
Well, so far, crypto is really good for moving money across borders, for banking the unbanked, and it's good for holding value. What's going to be happening soon is that crypto is going to be spendable, and people will spend it, you know, on their credit card, on their debit card. They'll go into Starbucks and they'll buy crypto. I think in 5 years, we're going to see you're going to try to go buy a cup of coffee with some fiat currency, and they will laugh at you.
And that's going to happen in 5 years?
In 5 years. By that time, because crypto's now getting incorporated into our credit system. It's getting incorporated into holding accounts. It's going to be, and identity's getting better and better and better. And so hackers, by the way, you're going to be out of business. And so, you know, steal what you can now, but it's not going to be there for you in the future.
So my next guest is the founder of the REP token, or the founder of Ogre, and today he's the founder and CEO of Awesome Ventures. Jeremy Gardner, thank you for coming on to Crypto Trader finally.
Thank you for having me. It's long overdue.
Look, we had a good panel on the stage today. We were talking about crypto investing and the barriers to crypto investing. What in your mind are the biggest barriers to crypto investing today? Why aren't we seeing a wave of money coming into crypto today?
I think it's quite simple, actually. If you look at the platforms that exist for buying Bitcoin today, almost all of them are trading platforms. Coinbase even, it incentivizes you to go and trade and time the market, and it's plaguing this industry with a sense of short-termism that's really unhealthy, because who can actually time the crypto markets? It's crazy. We don't actually have an investment platform, like a brokerage website where you just go buy and hold crypto. I actually just invested in the seed round of a company that's doing just that, but for the most part, no platform like that exists, at least in the United States.
So you're saying that every platform that exists encourages people to speculate by buying individual tokens?
And even worse, forces them to secure their own coins, which obviously is the point of crypto, allows you to be your own bank, but 95% of consumers don't want to do that. And given that I'd say 90% of consumers have no idea how to use two-factor authentication, what you're opening these people up to is someone gets access to their password to their account, which is probably the same as their email, probably the same as their Facebook, and then they get on their Coinbase, and guess what happens when the coins are sent to another account? You're never getting them back. There's no way to reverse a crypto transaction. So I'd say for the vast majority of consumers, the platforms that exist today simply are not suitable for investing in crypto assets.
So when you invest in a crypto asset, what's your thesis? How do you make investment decisions? I know you're starting a fund now, and there's lots of excitement around Awesome Ventures and your fund. Talk to us about how you make investment decisions.
It's about team, and then team, and then team, and then eventually you start to think about what is the market that they're trying to address. Is this something that would be greatly enhanced by blockchain technology? Is this a market that doesn't even exist yet because it's only made possible by blockchain technology? Or are they trying to make a 2x or 3x better solution to something that already exists in a centralized form? If it's the latter, I'm generally not interested. Then lastly, I look at the technology and the other backers. But I'm not too worried about that, because I can always bring in other good backers. But I do a technology review. I bring in my technical advisors, the associate that I'm hiring shortly, and I'll have them review the technology. The fact is that the tech changes as this blockchain ecosystem evolves so quickly that it's really about the team and addressable market. Everything else you can adapt to.
And the type of technologies or platforms that you're investing in, do you have a thesis of the type of tokens that you invest in?
Yes, so we have a very multifaceted approach, but we're actually an impact fund. We're probably the only fund in the entire crypto economy, despite there being hundreds at this point, that is focused on investing only in technology that, if it's successful in, say, 7 to 10 years, will have made the world a better place. And now, in my view, 80, 70% of all blockchain technologies actually do that, including crypto assets, but we're the only fund that's actually focused on investing in solely those types of technologies and entrepreneurs. Now, what that really prevents us from doing is investing in proof of work technology, and that's probably the biggest differentiator. Proof of work, in my view, is both economically and more importantly, environmentally inefficient. It consumes a tremendous amount of power. I mean, in a slide on the panel, someone said it requires $4,700 to mine a single Bitcoin in electricity. That cost is untenable, given that there are other consensus mechanisms at work.
So has Bitcoin let us down? I mean, Bitcoin was the granddaddy of cryptocurrencies. Has it been too slow to evolve? Has it let us down? Has Bitcoin failed?
No, because if Bitcoin had in fact failed, gone to zero, we wouldn't be at this conference right now. So it's done a good enough job. Now, whether it's fulfilled its initial purpose, as outlined by Satoshi Nakamoto, absolutely not. It is not, and it is not going to become a peer-to-peer electronic cash system.
So having said that, if you were to invest in a peer-to-peer electronic cash system, which is the token you'd buy?
I'm an advisor to Basecoin, also an investor, huge believer. I don't like tethered-based cryptocurrency, so where $1 in turns into a tethered US dollar with its tether or true USD. I really like the idea of an algorithmic cryptocurrency that maintains parity with the dollar.
That was Basecoin, which just did their ICO.
Yes. Well, pre-sale, yeah.
Pre-sale. Now, your baby, Ogre, it's your baby. It's your heart and soul.
If it's successful, it will be a defining part of my legacy, no matter what I do in the future.
Talk us through the thinking behind the utility token nature of the REP token.
Sure. So, first of all, we didn't want to create a token when it came to building Augur. We wrote a white paper on how to build a decentralized prediction market platform on top of Bitcoin. And we really wanted to do that. Ethereum, when we wrote the white paper, was a year away from launching. So it seemed like a non-option. We weren't thinking about Ethereum. But then we tried to go build on top of Bitcoin, and it didn't work. And so then Vitalik, who's an advisor to us already because he loved prediction markets, was like, why don't you try building on Ethereum? And we're like, dude, your blockchain hasn't launched yet. But we decided to give it a shot and ended up being a way more dynamic, usable platform for creating a decentralized application. But then we ran into a second problem, which was thinking about consensus in our system. So if you think about a betting platform, you can create a decentralized betting platform on top of Ethereum and just use Ether for making the bets. But then how do you resolve the bets that have been made on this platform? Well, you could rely on one person or one entity or an API, but that's a centralized source of failure. And the whole point of blockchain technology is to remove centralized points of failure. And so what we realized was the only way we could create a truly decentralized prediction market platform was by issuing a secondary token on top of the Ethereum blockchain that enabled its holders to report on the outcome of events, creating a decentralized Oracle solution, which was in fact a problem that had plagued computer science since the advent of the World Wide Web. But by incentivizing people to report on the outcome of events, giving them half of all the trading fees in the system, we create a fully decentralized system. So let's say the Forecast Foundation, who's behind Augur, gets shut down, everyone goes to jail or gets murdered or dies. It doesn't matter, the system still works. It will still fully operate because the system is totally decentralized. Now, if you remove the decentralized Oracle solution, then all of a sudden you have a system that has central points of failure. And if you remove those central points of failure, the whole system breaks. There are very few utility tokens in existence across the entire crypto economy that are truly that full of utility.
So, let me tell you a little story. People often ask me how I got into the blockchain and how I landed up on CNBC. Well, the answer is pretty simple. I once heard a talk by Peter Diamandis. I went to Singularity University and I heard Peter Diamandis talking about exponential businesses. And at the time, I was running a very linear marketing business. And as the talk evolved, one of the topics that came up was the blockchain. And when I heard about the blockchain, I knew that I had to sell my marketing business and get into the blockchain. So tonight, who do I have with me? The man himself, Peter Diamandis. Peter,
pleasure.
You changed my life.
Thank you. That's when I hear that, that's the incredible payoff for all the things I've worked on.
I've been on many TV interviews and radio interviews, and people ask me, how did you get into the blockchain? And today I'm probably the 15th most influential person on the blockchain as per the rankings. And the answer is always very simple. I heard a talk by Peter Diamandis. And Peter Diamandis inspired me. So
thank you, pal.
In case you think you're not inspiring people and you're not changing lives, here's a living example of someone's life who you've changed.
Awesome.
So you're just about to go onto stage and change more lives? What are you talking about today?
Well, so I think that this community needs to understand some of the basic philosophies and principles that they can build on. And the first is something that you've spoken about, what I call the 6 Ds of Exponential, that when you digitize something, when you tokenize, another way to say it, it enters a period of slow, deceptive growth, and then it becomes disruptive, and ultimately it dematerializes, demonetizes, and democratizes products and services. And so I teach this to individuals, and I talk about, you need to think about how do you digitize your product or your service, because when you can do that, you can basically reduce the cost, you can make the marginal cost of creation and transmission near zero, and that demonetizes everything and then ultimately democratizes and makes it available for everybody. And I think that's the world we're heading towards. So I'm talking about the 6 Ds of Exponentials out of my book, Bold. I'll be talking about what I call, the sort of the theory around abundance, which is that technology is the force that takes what used to be scarce and makes it abundant over and over again. I believe there's nothing truly scarce. We think about energy as being scarce, but yet we live on a planet that is bathed in 8,000 times more energy from the sun than we consume as a species, right? So it used to be that we'd go and kill whales to get oil to light our nights, and then we ravage mountainsides to get the coal, and then we drill kilometers under the ocean floor, and now we've got abundant amount of energy from the sun, and we have energy, we have water, and so it's just these concepts that are going to transform the world. Africa, one of the sunniest continents on the planet, will be the most energy-rich exporter of technology, and how you digitize that energy and transmit it. There are companies like Grid Plus and WePower that are doing that on the blockchain. One of the other big things is that we're heading towards a world. In 2017, we had 3.7 billion connected on planet Earth, okay? About half the world's population. In the next 5 years, we're about to see 5G networks, we're about to see OneWeb, we're about to see a 10 terabit satellite constellation from Boeing and Starlink from SpaceX. We're effectively going to connect every single person on the planet, not like I got online at 9600 baud on AOL. They're coming online at gigabit connection speeds. 8 billion people connected at gigabit connection speeds. And honestly, these 4.2 billion new people coming online in the next 6 years represent this massive economic boom that no one's talking about. And those 4.2 billion people are all going to want insurance, banking, education, healthcare, but they're not going to go to an insurance broker, they're not going to go to an ATM, they're all going to want it digitally on the blockchain, on their digital device. And I just want to give people these frames for how to think about it. The last concept I'll talk about in my opening keynote is the notion that I'm always looking for user interface moments. What's a user interface moment? It's a moment in which a very complicated infrastructure has a user interface that is layered on top of it that makes this infrastructure easy to use, easy to build businesses on top.
So you have an infrastructure, and on top of the infrastructure you have an interface or a layer which allows for people and businesses to interface with the layer.
Yeah.
So in this case you got a blockchain.
You got the blockchain, you have multiple blockchains, and you have multiple token economies, and it just is a little bit complicated for the general public to understand and to utilize. And what I'm calling for is for companies to be thinking about what are the user interfaces that we can create. You were asking me earlier.
Which companies are actually building these interfaces that allow for the blockchain to be more usable?
One of them is a company called BlockV and its sister company Atomic Systems that is effectively creating a user interface moment on top. And it's how do we tie the internet is a means of information transfer, right? I can send you a photo, a video, an email, while blockchain and what BlockV is talking about is using the next iteration of the net as a means of value transmission, right?
Yeah,
so how do I send you a thing?
And BlockV is allowing you to actually customize this thing that you send.
And to visualize it and to customize it and to help it interface with our mind, the human persona, a lot easier.
Now, let's talk about digital currency or digital money. And you spoke about these people that are going to get onto the internet very soon, and they're going to get on at amazing speeds with these new phones. Are they going to be using digital currency?
I think they need to. I think they have to. I think a lot of these people are living in worlds where the traditional currencies are hard for them to use. They don't have credit cards. They don't have banks or banking cards. But they are using faux digital currencies, as in minutes from M-Pesa in Africa. And it just, in a world where we all have effectively free digital devices, I think these devices are going to be given away for free, an Android tablet or handset, because if I'm Amazon, I give you one of these devices for free, so you buy stuff on Amazon. But they're going to want to create, they're going to need to have some kind of digital currencies from which they can use and buy and build things.
So the markets have come down, and every time I look at my blockfolio, it's all in the red. I wonder how it is for the ICOs that are out there trying to raise cash. Can they still raise cash? I'm not so sure. Rob, you run a company called ICO Alert, and you guys track ICO movements.
Yeah.
So I got a few key questions for you. 2017, how much money was raised in ICOs?
More than $7 billion was raised by ICOs in 2017.
So I read amounts like 3 billion and 5 billion. Where do you get your data from?
We get all the data from our in-house data team, so we're the only comprehensive source for ICO information. All the other data you're reading, just simply incorrect.
So you're saying that there was $7 billion raised in ICOs, and what was the equivalent that was raised in venture capital last year?
In early stage venture capital, it was about $1.4 billion, so ICOs completely dwarf that number.
And how many ICOs were there in 2017?
Yeah, almost 2,000, 1,848 ICOs in 2017 to be specific.
And the average raise?
The average raise was about $4 million per ICO, which is a huge number.
And 2018, where are we in 2018?
Yeah, so 2018 so far, we've seen about $3 billion pour into the space already, just in the first 2.5 months, and that's distributed across about 1,000 ICOs.
I would imagine that today, with the markets coming down, it would be much more difficult to raise money for an ICO. Is that what's actually happening out there?
It doesn't seem to be the case, and our data is showing that more and more money is actually pouring into the ICO space, but the average raise per ICO is actually decreasing. So what we think is happening personally is that the money is flowing towards the better projects in the space, where we're going to see a much lower average this year, but a much higher per project raise at the top end.
So ICO Alert, you guys are an ICO service. What does the service do exactly?
Yeah, so we're the only comprehensive information source for ICOs and pre-ICOs, which is kind of an earlier stage for ICOs, get to some better deals, sometimes has some minimums. But to your point earlier about data, a lot of people are presenting incorrect data about ICOs out there, and we're truly the only source that has that accurate, comprehensive data.
And how can you be sure that you are the only source and that you have all the comprehensive data?
Yeah, we have a team of about 13 people in Pittsburgh, Pennsylvania, whose full-time job is just to make sure that we have that data. So we're very confident that it's correct.
Today, when I look at coin market cap, you're looking at about 1,550 tokens which are listed. Where are the rest of the tokens? If you mentioned that there were 1,700 ICOs last year and there may have been a whole lot this year, where are the tokens?
So a lot of them just haven't hit exchanges, or they're on decentralized exchanges. So when you're looking at CoinMarketCap, you're not really getting the full picture. You're only getting the picture of the exchanges out there that have an API that CoinMarketCap supports and can pull data from. But there are a lot of decentralized exchanges, and there are also a lot of ICOs that either didn't hit their funding goal or have not yet been listed on an exchange.
So if we look at CoinMarketCap, the market cap's been hovering between $300 billion and $400 billion. What do you think the real market cap is if you're saying the majority of the coins actually aren't on CoinMarketCap?
I don't know. It'll be interesting to see. I mean, at the peak last year in December with that massive bull run, we almost hit $1 trillion market cap. I think we'll see it come back to that, but I think what we're going to see is a consolidation where a lot of the ICOs that maybe don't have as innovative of an idea as they may have originally thought are going to kind of consolidate into other ICOs that actually have good ideas, and that's where we're going to see the majority of the market cap come from.
So for someone who looks at ICOs, do you have a favorite or some favorites in terms of recent ICOs?
Yeah, my favorite ICO that's still ongoing right now is a project called EOS, and it solves a lot of the scalability and usability requirements of current platforms in the space. So if you think of Ethereum as this smart contract sort of decentralized app platform, one of its key flaws is that it can't scale. There was an app that had 39,000 users, not just at once, but over 9 days, and it brought the network to a halt. So EOS is solving a lot of those issues, and for me, that's my personal favorite.
Yes, I know EOS very well, but EOS isn't developed yet. EOS is a concept, it's a dream.
Yeah, it
How
depends.
do we know that EOS is going to solve these problems?
Yeah, it depends on your version of developed. So right now there's a public testnet where if you're a developer, you can go, you can review the code, you can test it for yourself and see that the code actually works. But to your point, the actual public consumer-facing version will be out in June.
So Rob, if people want information on ICOs, how do they get hold of you?
Go to ICOalert.com. You can view our whole list. You can scroll through the thousands of ICOs and take a look at our reports that go a little more in depth on some of those ICOs that we think are special.
So we're doing the crypto tour around the world, and we're not the only ones doing the crypto tour around the world. Charles Hoskinson, who's the founder of the Cardinal Project, is also doing a crypto tour around the world. Charles, where have you been recently?
Oh boy, I've been everywhere. I started in Barbados, then went to Scotland, then went to London, London to Tokyo, Tokyo to Vietnam, Vietnam to Seoul, and now here to San Francisco, all in one trip.
When do you actually do work? When do you actually build Cardano?
Oh, I'm working all the time. I run my whole company from a cell phone, and we have 3 labs in 3 different countries that do the research, and about 50 engineers in 10 different countries coding, 24/7.
So take me a step back. I own Cardano. Actually, funny enough, Vitalik Buterin told me that I should be looking at Cardano. And as he said that, I bought Cardano. But I have no idea what Cardano is. So maybe just help me. What is Cardano?
So Cardano is our attempt to build what's called a 3rd generation cryptocurrency. So to understand that, you'd look at where Bitcoin and Ethereum came from. Bitcoin was about creating a collective delusion in the world that these tokens that were over the internet, by some anonymous hacker, were actually worth real money. And after that delusion set in, people said, well, we want it to be useful. So Ethereum came about with the concept of the smart contract. The problem is they don't scale. They don't scale to millions to billions of users. They're not interoperable with many different systems. And furthermore, they're not really sustainable. It's not clear how you make decisions about where the protocol should go and how do you pay for those development costs. So Cardano is trying to be that true 3rd generation where we can scale, we're interoperable as many systems as possible, and we have governance in the blockchain.
Those are big words, but let's talk about how you achieve those things. So for example, how do you achieve scaling?
Yeah, so that's a very complex topic, but first you have to ask yourself, what are the conditions required? First, your protocols have to be built with science. So we're the first peer-reviewed cryptocurrency, we like to say. Our labs write papers. Those papers go to crypto, to Eurocrypt, to many other places, and they're written by scientists, not by amateurs. And second, once you start that process of writing these papers, it's all about asking yourself, how do you gain resources as you gain users? So BitTorrent is like this. If you download a movie on BitTorrent, it gets faster when more people are downloading instead of slower. So it's trying to take those types of concepts and ideas, put them into the university setting, and come out with protocols that allow you to grow faster when you gain more users. That's the key to achieving scalability. The second thing is take a lot of those things that are all done on a blockchain and segregate them into things that perhaps could be better done off blockchain with the same level of security. So exploiting better blockchain protocols and better off-chain protocols.
So running a blockchain and running an off-chain protocol, something like Bitcoin's doing with Lightning.
Yeah, but there's actually, it turns out, a lot more things you can do. For example, verified computation, and that's something that's Microsoft's baby with the Pinocchio project and the Geppetto project, or multi-party computation. So we have a lab at Tokyo Tech that studies this. It's also something the Enigma project is working on over at MIT. But basically the idea is saying, maybe instead of having it all run in one system, we can have the people who care about it run it and then get some sort of proof that it's been run correctly, so we don't have to trust them.
And where are you guys in the development of Cardano? Is Cardano working? Are there transactions going through
Sure,
it?
Absolutely. We're live. We've been live since September of 2017, and we're building the system in layers. We look back and say, like, what's the oldest, best protocol around that's most useful for people? And that was TCP/IP. It's a layered protocol. It's been around for decades. So we said, similarly, if you're going to build a successful cryptocurrency that eventually could become the stack of a country, you need to build that in layers. And so that's exactly what we're doing with Cardano. So the very first layer of the system woke up in September of last year, and we're just adding layer after layer after layer. We have another major release called Shelly that's coming in the next few months to maybe a quarter or two, depends on how long the engineering takes. And then we'll add smart contract support and just keep turning on features until eventually it takes over the world.
And when you talk about of a country, it's quite a big statement. Well, what do you mean of a country?
So there's a lot of things countries do for you. They give you your driver's license, your passport, they give you property registration, they give you a stable money, you vote to keep them in power. And so all of these are services, and they rely upon some sort of a centralized ledger, and they rely upon some sort of social consensus. So it turns out that you can take all of those things and you can put them into a blockchain style environment. So what the Cardinal Project is all about is saying, can you do these things in the most secure way possible, in the least trustful way possible? And then what we can do is go into places like, for example, we're setting up an office in Ethiopia and say, maybe we can do property registration, or maybe we can do voting, or maybe we can come up with a better way of identity and reputation for lending, and do this in a blockchain style setting as opposed to a traditional legacy paper-based setting. And the advantage there is you reduce fraud, waste, and abuse. And also you globalize it intrinsically, because instead of working in a silo in one little place, you've now opened it up and made it interfaceable with the global markets.
Let's talk about the Cardano team. The Cardano team, I've heard, are a lot of academics, a lot of scientists. Give me some background as to who these people are.
Yeah, so our chief scientist, for example, is Professor Agalos Kayasis. He's based in University of Edinburgh in Scotland. He's written many, many papers. He's a wonderful cryptographer that's been around for decades. One of our lead technical leads is Duncan Coutts. He's got a PhD from Oxford in computer science. So we pride ourselves in our ability to attract great talent, and that comes from having a very diverse working environment, also a commitment to decentralization. We actually operate in 10 countries, so we let people work where they want to work in the environments that they want to work. And also the problems we're trying to solve are so hard that they tend to attract some of the brightest minds. The other thing is we use tools and techniques which are not typical in the cryptocurrency space, much more the engineering space. We use Haskell and formal methods, for example, and there's only a small collection of projects that actually let you do that. So it's kind of like an all-you-can-eat buffet for academics, but it has a very deeply practical bend to it. So we're always trying to harness that raw intelligence and put it onto a time frame and get things out in a reliable way.
And is the project decentralized in its nature?
Yeah, it's federated from the beginning. So we focus on the protocol. IOHK is the engineering company. Then there's an independent foundation based in Switzerland called the Cardinal Foundation, and they kind of manage holding the trademarks and community management and so forth. And then the stuff that we want people to build on top of it's handled by a venture company called Emergo, which is independent of IOHK, and they're kind of like the consensus of our ecosystem. So they worry about the dApps and the enterprise contracting and these things and bringing people in from a business perspective into the protocol.
So it is your job to tell us that Cardano is the best, but I'm
Well,
going
of
to put
course
you on
it
the
is.
spot here. Because I know you've been on a worldwide tour and you've spoken about cryptocurrencies and adoption, and you spoke about cryptocurrencies here today.
Right.
If I were to ask you, 5 tokens, no buying and no selling, for 3 years, which 5 tokens would you hold in your portfolio?
Well, that's a good, so I think Ethereum has great legs. Vitalik is a good leader, and he's brought a great team of people together, and that ecosystem is here to stay. I started in 2011, so obviously Bitcoin is near and dear to my heart. No matter what, that's always going to be in the portfolio. I have a lot of respect and admiration for Litecoin as well. I really love Charlie Lee, and I think those guys are going to be around forever. Whether they're valuable or not, who knows? But you know, Charlie's a persistent guy. Obviously ADA, and that's really nice. And then you just pick your favorite next generation thing as your wild card, right? There's a lot of these things floating around, and I couldn't pick one or the other. But generally what I look for in any token is, does it have a really solid team? Is there a really good process that team is following to evolve and improve themselves? How does the team deal with strife and adversity? So I never pick a token that hasn't had some sort of major crisis, or like a fork or a strife or a core developer leave. Every project, Ripple on down, has had this issue. And they need to demonstrate resiliency beyond that. And so any token that's done that is probably pretty stable and here to go. The other thing I always remind people is there's no rush. You can start an internet company today and become a billionaire. And the internet's been around a long time. And similarly, 20 years from now, if cryptocurrencies are real, you should be able to start a cryptocurrency or work with a cryptocurrency and become a billionaire from that process if you have a great idea, right? If this is a real space. It's just the types of things you do today would be different than the types of things you do 2 decades from now, similar to the internet.
And that's because we're still at the beginning.
Exactly.
The baby's neck hasn't even strengthened and we're asking the baby to run.
Right. We're asking the baby to play in the Olympics, to displace the legacy financial system.
That's all the time we have for tonight. We've had a great time here at Token Fest and we've spoken to some big names. Until next week, where we hope the markets pick up. Trade well, my friends.
Crypto Trader is proudly brought to you by Element, a full-service investment bank for the digital token capital markets.